Good morning, friends. At the outset, let me welcome each and every one of you for this fast track webinar series, BIndAS, exclusively for ICAI certificate course on Indian accounting standards. Today, we are going to see two very interesting standards. One is IndAS 41. Indian Accounting Standard 41 is on agriculture. And another standard will be on Indian Accounting Standard 37 on provisions, contingent liabilities, and contingent assets. So these are the two standards I'll be discussing today. Now, do we have... yeah. So good morning, Sampath Kumarji. Thank you very much for joining on time. Good.
Thank you, Dr. Raju. Good morning.
Yes. Now, friends, there will be one section called Pinnacle, exclusively discussing case studies. I have announced yesterday that 5th of evening, 7 to 9 p.m. and 6th of morning, 8 to 10 a.m. These are the 2 dates. 4 hours, it will be an exclusive case study question, focusing on the 50 marks, 25 questions into 2 marks. So those who are interested, please be in touch with the coordinator. He will help you. Okay. Good. Coming to agriculture. Before I start this point, I want everybody to focus on this 17 global goals which is announced by United Nations in 2015. This is a 15-year 2030 goals. And one of the goals is, please look at item number 2, no hunger. It is not called as zero hunger. It is actually no hunger. Okay. So zero hunger or no hunger is the catch for your sustainability of agricultural production. Now, friends, how do we achieve this? And even in our Tamil, Bharadiyar has written one poem, Tani oruvanukku unavillai enil inda jagatine azhithiduvom, meaning nobody should be there in this world with hunger. And if anybody is there, then there is no meaning the world should exist. So that is the purpose, and together we can actually achieve this. And for the first time, we are having standards for agriculture. Agriculture accounting is a very common accounting method, and many textbooks also doesn't focus on agriculture accounting. But what is so special about IndAS 41? It is only 57 paragraphs, and para number 5 will be a definition paragraph. Now, before I venture into some of the significant aspects, I'll just share before you few annual reports. Please look at this. This is an annual report of Tata Coffee Limited, and this is an annual report of Venky's India Limited. So previously, this company was not named as Venkateshwara Hatcheries Limited, VHL, and they have changed this to Venky's India. Number 1 listed company with respect to poultry farming. And Tata Coffee Limited is one of the celebrated listed companies which is in the agri area with respect to coffee and other plantation. Now, I want to bring to your kind attention in Tata Coffee, page number 143. Please look at this page 143 paragraph. You will have a rough idea about what I am going to discuss now. Please look at this. Biological assets. My goodness. And look at the type of biological assets and the estimated useful life. So they have, they plant coffee, Arabica robusta, tea bushes, pepper vines and cardamom tillers, silver oak and shade management trees. And look at the estimated useful life. Coffee plant, Arabica is 30 years and Robusta is 58 years. Tea bush is 58 years, almost 60 years. So instead of calling it as 60, they made it 58. So they have a reason for it. And biological assets is what I'm going to discuss now. Now, I will also bring to your kind attention one particular table, that is the property, plant and equipment. So this is the property, plant and equipment table. And here, if you look at the various verticals, one of the vertical like land and building, water, sanitary installation, electrical, computers, you have bearer plants. Bearer plant is a asset, property, plant and equipment asset. Now please look at Venki. In Venki, they have a biological asset, and I'll take you to page number 91. So please look at page 91 here, and this is 91. And look at 91. You have a biological asset here. So this biological asset, what is it? Poultry. We give a very colloquial name called chicken, but they are all livestock breeding parents. So you need a parent to breed the broiler birds and layer birds, hatching eggs, live commercial birds. Please look at the category. I'll explain this, how significant this agriculture industry is. And for your information, look at the balance sheet. I'll just share with you the balance sheet of Venki. You will be quite surprised. This is the balance sheet of Venki, where look at, this is the liability part. Look at the asset part. So non-current asset, you have property, plant and equipment. And in current assets, you have biological assets. You have inventory, you have biological assets. So I'm going to take you through this particular standard and distinguish quite clearly when a biological asset will come under. And one particular example, here also in property, plant and equipment, you will have a biological asset. So I'll just want to share with you that particular point also. So Venki's balance sheet is quite Venki and Tata Coffee, because Tata Coffee is with respect to agriculture and Venki is with respect to your poultry. Okay. Now, even in Tata Coffee, I want to make one observation, which is in page number 140. Look at page number 140. I want to make one observation here, which is the biological inventories include agricultural produce. Oh, so now in Venki, you have seen two things. In property, plant and equipment also you have a biological asset, and in current asset also you will have a biological asset. So I'll just share with you. So even in Tata Coffee also you have both. So keeping this in mind, I am taking you to some of the interesting questions, and please watch this 41. Actually 41 is 4 square plus 5 square. Now what is 4 square? 16, and 5 square is 25. 16 plus 25 is 41. 4 refers to the agriculture 4.0 revolution, where the technology has been brought in agriculture, and 5 refers to the 5 elements of earth, that is earth, water, fire, air and space. So the 5 basic nature force. Okay, so these 5 along with this agriculture 4.1, they only contribute to the present primary sector. And for your information, there is another version to this 5. The 5 elements allow you to understand the laws of nature also: health, power, knowledge, wisdom and happiness. And please look at this. Agriculture employed more than 50% of Indian workforce and contributed to 17 to 18% of country's GDP. So keeping all this in mind, please look at question number 1. Limited is a company which buys agricultural produce from wholesale suppliers for retail to the general public. It is preparing its financial statements for the year ending 31st March 2021. Okay, and is considering its closing inventory. In addition to IndAS 2 inventory, which of the following Indian accounting standard may be relevant to determine the figure to be included in financial statements for closing inventory? Now, please understand what is considered here. It buys agricultural produce from wholesale suppliers for retail and to the general public. So they buy the agricultural produce and they sell. While preparing financial statements, it is considering closing inventory. Now, in addition to IndAS 2, now closing inventory, you will value the inventory at cost or net realizable value, whichever is lower. That is what IndAS 2 says. In addition to that, which of these four may be relevant to determine the figures to be included in financial statement for closing inventory? Is it IndAS 41 agriculture? Is it IndAS 16 property, plant and equipment? IndAS 115 revenue from the contract with customers, and IndAS 10 events after the reporting period? Now, here I want to share with you only one part. So there are standards which will connect IndAS 41. For example, when agriculture produce is made, say I was referring to Tata Coffee. In Tata Coffee, look at this. This is your Tata Coffee. So here, agricultural produce is also there. You also have the bearer plant. Now, what is the bearer plant? Your bearer plant is all these coffee plant, tea bushes. So bearer plant will be an asset, IndAS 16. Now, from the asset, you pluck the bush, tea bushes, coffee beans you take. Once you take the produce becomes, I repeat, produce will come under IndAS 41. Now, how the produce has to be measured? Produce has to be measured in the IndAS 41 at fair value. At fair value. And once you measure it, then you will go to IndAS 2 because it becomes an inventory. Because you have to sell that. So, from the property, plant and equipment, you pluck it. It becomes, I repeat, I'll just show you the standard here. Yeah, so we are here. Look at the agricultural produce. So what is the produce? The produce is the harvested product of the entity's biological asset. The produce is the harvested. So what is harvest? That is also defined. What is detachment from the biological asset? So a biological asset is a living plant or an animal. So that is why I gave two examples. Living plant, I am giving Tata Coffee. Living animal, I am giving the example of a Winky. So these are the two examples I gave you. And you have the bearer plant is a living plant. So you will not have this example. The word bearer plant will not come for Winky. But for Winky, you will have what do you call it as biological asset. Biological asset will be there for Winky because it is a living plant or an animal. So there, once it is a produce, for example, egg is a produce. Egg is a produce. You have a layer bird. You have a layer bird. Layer bird will only be laying eggs. So layer bird is an asset for me. But once it lays the egg, it becomes an agricultural produce. Agricultural produce I will measure at fair value and I will take it to IndAS 2 inventory. So please understand the connect between all these three standards. IndAS 2, IndAS 41 and IndAS 16. And in between this, I have brought one more standard here with respect to this particular question. Okay. Revenue part will not come with respect to inventory at all. Property, plant and equipment will not come with respect to inventory because it is only with respect to the biological asset or bearer plant. 41 agriculture will come only with respect to a produce. So therefore, by elimination, it is only IndAS 10 events occurring after the reporting period. So, for example, this IndAS paragraph 9b2 will mention that you measure the inventory as on 31st March at cost or NRV, whichever is lower. Let us presume cost is lower. Okay. Now, before you finalize the accounts, there are events after reporting period, like there is a loss or there is a depletion in the market price. So then my inventory, my NRV will be lower than my cost. So then I have to take a prudent view and provide in my books of account. So that's why IndAS 10. So A will be your answer for your first question. Now come to the second question. Which of the following combination is false? Now please understand, you have a paragraph here. So let me show you that particular paragraph. This is the para with respect to, look at this para 4. This is an asset, this is agricultural produce. Sheep is an asset, produce, wool. Now please understand, biological asset will not come under IndAS 41. It will come under IndAS 16. So that is why this standard does not apply to bearer plant. Bearer plant. This standard does not apply to bearer plant. Why? Because bearer plant will go to IndAS 16. But remember, sometimes plant or the bearer plants are cultivated for harvest only. Like for example, groundnut, carrot, beans, potato, all these, it will be harvested. It will not be going for a cycle. Okay. Sugar cane, they are all bearer plant, then they will cut it. So bearer plant related to agriculture. However, this standard applies to the produce on those bearer plant. So bearer plant will go to IndAS 16 and the produce will come under IndAS 41. So how do you measure the produce? Produce will be in tons. So that is your asset. So how will you bring in your books of accounts? How will you measure it in your books of accounts? So therefore, please appreciate this fundamental difference. So asset, produce. Sugarcane, harvested cane. Tea bushes, picked leaves. Oil palm, picked fruit. Then rubber tree, latex. These are all. So produce will come under 41. Biological assets will go to 16. Okay. Now look at this particular question now. Which of the following one is false? Agriculture, land, paddy, bush leaf, pig carcass, grapevine, and grapes. So now, which is the false? Bush and leaf. Please look at this. Tea bush and tea leaves. So this is a proper combo. Okay. Pig and carcass means, okay, that is a biological asset, and once they kill, it becomes a produce. Same is the case with your Venki also. So Venki, the broiler birds. Broiler birds will be your biological asset. But once you kill it, okay, once you take it for, once it matures, okay, so it becomes a chicken. Chicken is actually lifeless. So that is your carcass. So dairy, cattle, dairy, milk, pig carcass. So even you can even take the case of the poultry also. Okay. So this is also a match. Grape wines and grapes, because grape wine is your biological asset. Grapes is your produce. So grape wines and grapes. So that is also a biological asset and produce. But agricultural land, is it an animal or is it a plant? No, neither. So please understand the fundamental difference here. So agricultural land is not a biological asset. It is an asset. Land is an asset. So biological asset and produce. Biological asset means life is there. Life is there. But we don't conclude that no, land doesn't have a life. That is the speciality of agriculture. So inside the land, inside the soil, you put a seed, and seed will be in a it will be dark. Once you close it with soil, it is dark, and that is the magic of our Indian land. That's the magic of earth, that it germinates. Only from darkness the seed germinates. So therefore, paddy will become, whether paddy is an agricultural produce, actually it will be a biological plant only for the purpose of harvest. Biological plant, biological asset for the purpose of harvest. Does it come within IndAS 41? Yes, it will come within IndAS 41. So 2A. Okay, good. Now come to another question here. Which IndAS deal with agriculture? 41. So therefore, it is 5C. Now, IndAS agriculture does not apply to except. Now, this is actually negative and negative. Negative and negative means positive. It applies to what? Now, let me take you to this paragraph. Come to this para. This is that para. This standard does not apply to land related to agriculture activity because land will go to IndAS 16. So, IndAS does not apply to land related to agricultural activity. Okay. Now, this standard does not apply to bearer plans related to agricultural activity. So, bearer plans related to agricultural activity, it does not apply. Now, please look at the next one. However, this standard applies to produce. Okay, it will apply to produce. Now, produce, how do you measure it? We have a separate prescription for that. Okay, this is the measurement part. So, now agricultural produce para 13, please look at this. Agricultural produce harvested shall be measured at fair value. Now, what is fair value? Market value. So, you have the eggs, you have the broiler birds, you have the tea leaves, you have the coffee beans. So, once you pluck it, you have everything in basket. So, how that basket, that has a value. What is that value? Will you go by cost? No, you have to go by fair value. Very interesting paragraph. 13 para is one of the best paragraph. And please look at this. Once you measure at fair value, such measurement is the cost. Oh, is fair value is a cost? Yes, that is the cost on the date when applying IndAS to inventory. So once you pluck it, it becomes produce. Produce you measure at fair value, and that will be the cost for IndAS to, because that you are going to sell it. Okay, please understand this. Very, very, very important connect between 41 and 2. Okay, so very interesting paragraph. So I'm in. So this does not apply to AB. Government grants relating to bearer plans. Now, please look at this government grants. Look at this paragraph. Government grants relating to bearer plans. You have a separate standard for it. IndAS 20. Because, for example, you have got a government grant. So nowadays, I'll own the land, and the government will give money to actually do cultivation. Sometimes I am an agriculture, I don't have a land at all. Government will give me a land, and I have to put my efforts to cultivate. And from the cultivation, from the produce, one portion I will retain, which will be my benefits. One portion I will give it to government. Now, government will also buy my share also. Let us say 50-50. 50 belongs to government. 50 belongs to me. My portion also I will sell to government. So government will take everything, but 50% only it will pay me. The balance 50% government has given land to me. So then how that has to be measured? We have a separate prescription under IndAS 20, not under IndAS 41. So very interesting connect is there between all these standards. You have to very patiently understand the business part of it. Unless you understand the business part of it, the practical part of applying the accounting will be very clear. Okay, good. Now let me take you to the next question. Okay, so therefore 6C. Okay, produce or bearer plant is applicable for IndAS 41. Okay, look at this question. This question is very, very tricky. Okay, IndAS 41 is applied to agricultural produce, which is harvested produce. Okay. So I'll just take you to para number 3. Look at this. This standard is applied to agricultural produce. Okay. So it is not applicable for bearer plant, but it is applicable for the produce, which is the produce of the biology at the point of harvest. At the point of harvest, IndAS 41 is applicable. Measure it at fair value. After that, IndAS. Thereafter. At the point of harvest, IndAS 41 applicable. Thereafter, you are going to sell that asset. Okay, you are going to sell that. Thereafter, IndAS 2 will be applicable. So this is the paragraph that is again repeated in para number 13 also, which I just now explained. This is para number 13. Yes. So now answer this question. IndAS 41 agriculture is applied to agricultural produce, which is the harvested produce. Till harvest, no. After harvest, no. At all point of time, no. It is not applicable. At the point of harvest, once you pluck it, Till you pluck it, it is a live plant. Okay. For example, in Venki, you have various types of birds. For example, there is a bird which will only lay egg. This is called layer bird. Okay. There are birds which will not lay eggs. That is called broiler birds. So broiler birds are only cultivated. Okay. Are only cultivated, and layer birds. Layer birds will lay eggs, and eggs are produced. Broiler birds, they don't lay eggs. It is neither male nor female. That is a problem with the broiler birds. That is the reason why you have a lot of infertility clinics in India. Okay, because neither male nor female, but it is only flesh. So broiler birds are actually cultivated for harvest. Okay, once it reaches a particular age, 42 weeks, so it will be taken out for harvest. So it will be killed, and it will the meat only for the purpose of meat. Okay, so therefore, what is the difference between these two? Here, the layer birds is a biological assets, but the egg egg that is laid will become agricultural produce. Here, the entire asset will become the biological asset, and entire asset, once it matures, it is a harvest. So it is the broiler birds are grown up only for harvest only. The we have this what is this rice paddy fields. Rice paddy fields are cultivated only for the purpose of harvest. So please understand the fundamental difference between these two. Here, the biological asset will go to 16. India is 16. Produce alone will come under, egg alone will come under, or the tea bushes alone will come under 41. Here, the entire asset will come under India is 41, because you are going to measure at fair value. You are going to measure. Now, if it is matured, you will actually harvest it. Now, every year, every week, for example, if it is 31st March and the bird is only 28 weeks, how will you measure it? Fair value. It is fair value only. So therefore, because the entire thing is it is a biological asset only for the purpose of harvest. Now I'm taking you to a very important paragraph. All of you, please pay your kind attention. A very, very important paragraph I'm going to take you to. Please look at this paragraph. This is the paragraph. Look at this paragraph which I'm going to take you to. So I will take you to a paragraph. Sorry for I'm here. I'll take you to the paragraph called biological asset and other assets. So I'm going to bring you to para number 43. Sorry for that. This is your para 40. Look at this word. Consumable biological assets are those that are to be harvested as agricultural produce or sold as biological assets. So harvest means, so your broiler birds are called consumable biological assets. Okay, please understand the fundamental difference. Okay, so examples of consumed biological livestock, produced for meat only, fish held for sale, crops, maize, wheat, etc. These are all consumable biological assets. Okay, so very, very interesting part. As per IndAS 41, an entity is encouraged to provide a quantified description of each group of biological asset, distinguishing between. Okay, now please look at para 43. Okay, now an entity is encouraged to provide quantified description of each group of biological assets, distinguishing between consumable and bearer biological assets. Now, your layer bird will be called as bearer biological because it will bear the produce, or the plant bear the produce. So bearer and consumable means it is grown only for meat purpose or for harvest purpose. And you have to give the quantity description also. So that is why in Venki, you will have the quantity description. Now please look at the one paragraph which I'll show you the quantity description of both these. Okay. So you need to understand the fundamental difference between both. Now please look at this is capital. I'll take this is financial assets. You have inventory, biological assets. Please look at this. Bearer and consumable biological assets. So bearer biological assets, consumable biological assets. They distinguish this in the note. Okay, so fundamental difference. And they also give the quantity. And look at this, is a reconciliation of the changes in cost. And they also give the quantity. Biological as the end of the period. Look at the numbers. Poultry, hatching eggs, commercial broiler birds. They give the numbers also. So values also their numbers. So that is what. So now answer this question. As per IndAS 41, entity is encouraged to provide a quantity description of each group of biological assets, distinguishing between consumable and bearer, mature and immature. So again, I will take you to 43. So distinguishing between consumable and bearer. And an entity may disclose the carrying amount of biological assets and bearer by group. An entity may further divide. So now, for example, you have the bearer biological assets and consumable biological assets. Let us take consumable biological asset as your broiler birds. Your broiler birds will mature only in 42 weeks only. Otherwise, it is only small bird. So only if it is 42, it is for meat. Now, on 31st March, it is not 42 weeks. It is immature. So therefore, if it is immature and mature, you have to group it. So an entity may further divide the carrying amount between mature and immature. So this is very important. Okay. Now come to this question. So as per IndAS 41, entities encouraged to provide a quantity description of each group of biological asset, distinguishing between consumable and bearer, mature and immature. Both A and B, you have to give. Actually, under consumable, mature and immature will come. Okay, so once you say an entity may further divide between mature and immature asset, this distinction will help you to understand the timing or when it will be sold. Okay, so now which is the right answer? Either A or B. Okay, both A and B. Now please look at this wording. An entity may, this word may is very important. It is not must. It is not should. Okay, may further. So it is mature and immature. You want to give, you can give. So that is why the answer is either A or B. If you give B also, you are giving consumable, because consumer only you will classify. Okay. So therefore, it is either A or B. Okay. So very interesting question and very serious question also. Unless and otherwise you understand this question, you cannot answer. Practically, you have to understand what is consumable, what is bearer, what is mature, what is immature. You have to understand the business. You have to understand the business. Then automatically the applicability will be clear to you. Good. So now this is consumable versus bearer. I'm giving you the fundamental distinction. Okay. So there is also one case study. Which of the following would be classified as biological assets? Bearer plants, consumable plants, bearer animals, consumable animals, animals relating to recreational activities, animals, agricultural produce growing on bearer plants, agricultural produce harvested, agricultural land. So of this, which is biological asset? Will land will be biological asset? No, never. Okay. Agricultural produce harvested, it is not biological asset. It becomes, once it is harvested, life is not there. You have to measure at fair value, then it is inventory. Okay. So similarly, animals related to recreational activities, that is not biological asset, because that becomes your inventory. Okay, your inventory actually. All other are biological. Bearer plant, consumable plant, bearer animal, consumable animal. Okay, consumable plant, consumable animal, consumable biological asset, consumable these two are consumable biological assets. Okay, so that is grown only for the purpose of meat or for harvest. Agriculture produce growing on bearer plant. Once you pluck it, it will, because it is forming part of biological. Once you pluck it, it becomes a produce. Growing, not harvested. So please be careful with this kind of interpretation. Okay, good. So that is why I'm giving you one very important slide. Biological asset will come under 41. Produce at the point of harvest will come in 41. Government grant, okay, especially government grant, it will come under IndAS 20, not 40. IndAS 20 government grants, GG. Okay. Government grants will come under IndAS 20. Land relating to agriculture activity, it is IndAS 16, will go to property, plant and equipment. IndAS 40, maybe I'm only holding it for my additional investment. So IndAS 40, investment property. Intangible asset relating to agriculture activity will go to IndAS 38. Harvested product of biological, once you harvest it, it will go to inventory. Please understand the connect of IndAS 41 with the other standards. Okay, good. Now let me take you to provisions, contingent liabilities and contingent assets. Okay, So this is your, I can take the same standard, same annual report, especially Tata Coffee. Here I will take you to the paragraph relating to the provisions, contingent liabilities and contingent assets. Okay. So this paragraph I will take you to, and this is your standard. And remember, guys, India is 41, we had only 57 paras. But India is 37, you have 92 paragraphs. 92. So it's a very big standard. So let me introduce it very slowly, and especially para number 10. This is a definition standard. In this, you have a very important definition called provision and liability. Provision, liability, if you understand, I will say 90% of the standard is over. This is the two important definition you need to be very thorough with. Very thorough with. Okay. And these are the two. So what is the provision? What is the liability? So provision is the liability of uncertain timing or amount. Liability is present obligation of an entity. Now, please wait. This is very, I will say, technical. I will explain with some example. So let me take you to an example. Okay, good. Now, all of you, first of all, be cool, okay, before going to the subject. 37 degree, okay, please understand. Our normal human body temperature in Fahrenheit will be 97.5 to 99.5. Otherwise, called 98, we can say. If it is 98 means we are normal. In terms of centigrade, it is 36.5 to 37.5. So, the in between is 37. So, 37 is neither an expenditure nor not an expenditure. Yes, an expenditure, not an expenditure. So it is in between. So that is why 37 is very special. And reverse of 37 is 73. And 37 plus 37 is 74. And these two are adjacent number. Okay, just for how interestingly these numbers are there. Because this side and that side, you reverse and left and right. So very, very interesting number is 37. Okay. So what is provision? What is contingent liability? Contingent asset? Whether you have to measure it, recognize it, disclose it. Okay. Contingent liability, whether you have to measure it, recognize it, disclose it. So normally contingent liability and contingent assets are only to be disclosed. Whether it should be measured is the next question. Okay. Should I have to only give the English or not? Okay. So let me go slowly. It's very, very important standard. It is quite a mammoth size of standard. So let me first take you to a very interesting terminology called onerous. Okay. Actually, there were two friends who were discussing, and one friend came to me to another friend who he bought a new house. Okay. So, and both of them were sitting in the veranda and they were having a cup of tea, because tea was served by the friend's wife. And he was introducing how's the tea, and tea is very good. He said, and she is my wife, and she is the owner of this property. So that is how he introduced his wife to his friend. Okay, she is my wife, and she is the owner of this property, and she is onerous. We have an onerous contract between us. Okay, and there is an onerous property also. My wife is a onerous property. He doesn't understand. The other friend doesn't understand. Okay, because of love and affection, he says a wife is a onerous person. Actually, the meaning of the term called onerous means, please understand, I am taking you to a very, very important paragraph. Okay, so this is your 8th definition. Look at the 8th definition. What is a onerous contract means? A onerous contract means where the unavoidable cost of meeting the obligations exceeds the benefit. Okay, so exceeds the benefit. So that is why maybe that person has said, oh, my wife is a onerous property. Okay, and she is the owner of this property, and she is my onerous property. So that means the benefit, what benefit and the expenses. She is actually a onerous person. So the unavoidable cost exceeds the economic benefits. Okay, so that is called onerous contract. Now, whether it has to be recognized or not, okay, whether it has to be measured or not. So we have a very clear paragraph called 66. If an entity has a contract that is onerous, the present obligation under the contract shall be recognized and measured as a provision. You have to create a provision because you very well know cost to that particular contract is 150 lakhs. The benefit what you will get from that contract is 120 lakhs. So you very well know there is a cost involved of 30 lakhs. So you provide 30 lakhs in your books. If the word starts with if an entity has a contract. Okay, so good. Now answer this question. What is the onerous contract? Is a contract in which unavoidable cost is lower than the economic benefit. Cost is lower than benefit. Wrong. Okay. Cost is lower than benefit. Benefit is high. Income is high. So then it is a profit. Cost exceeds the economic benefit. So that means cost goes up, benefit is low. Okay. Good. Cost is equal to economic benefit. Wrong. It is an unliquidated amount. What is unliquidated amount? You never know the value at all. You never know the price. Cost also is unliquidated. Unliquidated is not fixed. What is the cost of this particular contract? I'm still working on. That is unliquidated. Then you cannot say whether it is onerous or not. Unless and otherwise you measure it and you know what is the cost and benefit, you can actually come to this conclusion. Okay. Good. Now, what is a provision? Okay. Now, this is actually a definition. Now, please look at this terminology, all of you. Look at this. Provision is a liability of uncertain timing or amount. So, provision is a liability. Let us be very clear about it. It is a liability. But when is that? What is the amount? When and what is uncertain. That is why you go for a provision. You create a provision. Let it come, you will pay. Let the amount come. So that is where you have a KMP. Okay, you have a KMP. Now what is you have a key. I'll just show you the auditors. This is your auditor's report. This is your auditor's report. So in your auditor's report, there will be a terminology with respect to this is your auditor's response. Look at this key audit matter. In key audit, KAM, in key audit matter, especially the measurement of provision. So it will always be an estimate. It will always be an estimate. So please look at this terminology. It is uncertain timing or amount, but it is a liability. You have to recognize in books of accounts. So how do you recognize? How do you measure it? So therefore, in key audit matter, they generally use this terminology. So especially with respect to, I'll just show you the Venki also. In Venki's balance sheet, audit report. And this is your key accounting estimates and judgment. Some of the places they make an estimate and judgment. So these estimates and judgment, can it be audited? You cannot audit. So therefore, audit report, they will mention this particular point very clearly that we are not able to actually comment about it. So I'll come to the definition. Now, this is your liability which is of uncertain timing or amount. So time also not known, amount also not crystallized. Okay. Now answer this question. A provision is a provision of uncertain timing or amount. It's a liability of uncertain timing. Possible or present obligation, legal or constructive obligation, present or legal obligation. Actually, the word obligation comes next. Okay, please come to this definition. Look at this. The liability is a present obligation. Now, what is an obligation? An obligation can be either a legal obligation, constructive obligation. So, what is a liability? It is an obligation. Now, what is an obligation? That is the next one. Okay, so therefore, I'll go one by one. First provision is uncertain timing or amount. So 2D. Now, let me come to another interesting terminology called restructuring. Now, what is restructuring? Okay, so I'll first take you to the definition part. Okay, so this standard applies to provisions for restructuring. My God, including discontinued operations. Now, what is this? My company is not doing well. So what I do, I want to actually restructure my company in terms of business, in terms of capital structure, in terms of process. So many things I want to restructure. Now, naturally, when you do the restructuring and then you do the business, your business may scale up. Now, restructuring has a cost. Okay. So now whether that cost has to be, now for example, you have taken a decision to restructure. The decision to restructure is taken in the month of March. The expenses will be incurred next year. Then in 31st March, what you will do? Will you provide? Okay. So therefore, this standard applies for provisions for restructuring. Oh, good. Okay. Will you provide? That's the question. Now I'll take you to the definition of provision. Restructuring. What is restructuring? Is a program that is planned in the month of March, controlled by the management, and materially changes either the business or the manner in which the business is conducted. Business itself, no, it's the old business. We'll go over a new business. No. This process we will improve. That is called restructuring, and the word is called materially changes. The word materially changes, total facelift. Okay. For example, we had a Mukesh Ambani's son who used to be very, very bulky, and today he has come down, a lot. So there is a material change. So he was above 100 kilo, 140 kilo plus. So there was a restructuring program, material change, and today he is hale and healthy and got married, and all this stuff happened. Okay, so very important. Now I'll take you to one particular paragraph also here, especially. There are certain examples are given with respect to restructuring. Now look at this examples. Following are examples only, which may fall under the definition. Sale of a business, one particular vertical I'm going to sell. Okay. Closure of a business. Okay. Change in management structure. Fundamental reorganization that will have material effect on the nature. Now these are not the only example. Please understand. These are few examples, just to give us a understanding that restructuring means it's quite a turnaround. Okay. So now please look at this question. A restructuring is a program that is planned and controlled by management, materially changes either scope of business, manner in which business is conducted, business model, structure of management oversight. So which is correct in this? So please look at your definition priority here, especially. So we have either the scope or changed, manner in which the business is connected. This A or B, not both. Okay. Either the business scope is changed. That means my object is changed, or the process is changed. Process is improved. So scope is changed. Manner in which business is connected. Either A or B. Either A or B. Either A or B. Look at the word either. So there itself, the answer says it should be any one. So it should be either. So as per any restructure, alternative choices. Only A is true. Only A, B are true. Only C and D are true. A and B. It is not A and B. Either A and B. So it should be either A or B. Okay. Since already the word either is there, it should be A and B. Okay. So it is answer is D. So either A or B. Good. Now come to the next one. IndAS 31 does not apply to executory contract. Now, what is executory contract? Unless. So I'm just taking you to one interesting article. And this is executory contract. Please look at this. There are various types of contract. Okay. Like mode of formation, performance oriented, validity enforcement. So I don't want to discuss all this, and just you can take this later. But the executory contract means neither party has performed any of its obligation, or both parties are partially performed. That means it has to be performed. That is what's called executory contract. Okay. Executory contract means not yet complete. Okay. Neither you have started or partly started. Okay. Or partially performed. So that is what it's called executory. To be done. So executory contract means you will have a cost for it, revenue for it. Now the revenue is higher, cost is less. Whether provisions, contingent liability, whether provision has to be made, no. But this standard does not apply to executory contract unless they are onerous. What is onerous? Cost goes up. What is the executory contract? Normal executory contract. Cost is less and revenue is more. Will you provide? No, I will not provide. It is not coming within this paragraph. It is not coming within this standard. So please understand the fundamental. So once you understand business, fundamental, the applicability is very clear. IndAS 37 does not apply to executory contract unless they are obligatory, contingent, onerous. Not restructuring. Anyhow, restructuring is not a contract. Restructuring is a business decision. So D is wrong. Contingent contract means whether you do it or not, you don't know. So how can that be an executory? Executory means you have signed it. So B is also wrong. Now what is obligatory contract? Obligation, you have to do it. Okay. So you are obligated to do. So that obligation means it is an execution to be done. So actually it is a type of executory contract. I told you many contract types. An obligatory contract is one type. So IndAS 37 does not apply to executory unless they are. So that means IndAS 37 excludes executory contract but includes onerous contract 4C. So please be careful. Okay. Please understand this part. Now, these are all the various types of contract. Now, very, very important question. Very, very important question. Contingent asset. Okay. Now, as far as provisions are concerned, you have to measure it. So I'll just share with you that particular paragraph. Provisions and liabilities. Okay. Now, provisions have to be recognized. Provision shall be recognized unless only when it is a present. This I have to actually explain with a lot of examples. What is legal obligation, constructive obligation, probability of outflow, reliable estimation. Reliable estimate is a place where the auditors will say, it is only an estimation, we are not able to audit it to the extent possible what they have explained to us. So therefore, it is a key audit matter. So please take note of it. So these are all some of the accounting areas where the transaction is not, the entry is not based on transaction, entry is based on only on estimate. Okay, so that is with respect to provision. Now I'll take you to one particular paragraph. Okay, that is with respect to the contingent asset. This is contingent liability. Contingent liability, entity shall not recognize contingent liability, but it will be disclosed. Okay, but it will be disclosed. But I want to make only one observation. Okay, please look at it. An entity recognizes the provisions except in the rare circumstances where no reliable, I'm sorry, just asset is here. Sorry, I was reading that part. An entity shall not recognize a contingent asset. So neither contingent liability nor contingent asset, both will not be recognized, but it will be disclosed. The contingent liability is disclosed. Similarly, contingent assets also will be disclosed. Okay, it will never. Contingent asset is disclosed. Okay. Now I want to make one observation. A contingent asset is disclosed where an inflow of economic benefits is probable. Oh my God. Actually, this particular standard has two terminologies. Please look at this word called possible, probable. Okay, there are two words, possible, probable. Contingent asset usually arise from unplanned or unexpected that gives rise to possibility. Now here they say contingent asset is disclosed only when the economic benefits is probable. So what is contingent asset? They explain. Something may come, it is possible. Now when you will disclose it, please understand, not recognize. Disclose means in a note you have to give. Okay. Only the economic benefits is probable. Now, is there any difference between possible and probable? Now, please come to this. Probable refers to what is likely to be done. Possible refers to what can be done. Now, what is this? Possible means it can happen. It can. Be it unlikely or likely. However, it is more often used to things which are unlikely. Probable means it is likely to happen. Possible can happen. Probable likely to happen. So that means closer to 100 is probable. Definite means it will happen 100%. Impossible means it will never happen 0. Impossible 0. Possible means between 1 and 100. Please look at this. Possible means between, not 0, just above 0. 1 to 100 is possible. Impossible means 0. Definite means 100. So impossible, I am clear. Definite, I am clear. Okay. Possible means 1 to 100. Possible means 1 to 100. So please understand this definition. Contingent asset means possible, but you will disclose only if it is probable. So what is probable? Close to 100. Nadakum. Okay, for example, sunny. Today it is sunny. So should I have to carry an umbrella? No, it is very gloomy. And I also have a weather report saying that rain will happen. So is it possible? No, it is probable. So probable. So that is why whenever you ask somebody, will you pass IndAS examination? I will pass. No, you must always say probably. Probable. The probability is very high. Okay. So please look at these wordings here. So contingent asset is disclosed where an inflow is probable, not possible. Contingent asset itself means the definition itself is possible. Something may come. Okay. Some good thing will happen. So whether good days are ahead, yes, good days are ahead. That is contingent. Okay. But good days are probable, very, very nearby. So that is called economic benefit is probable. Then you have to disclose. So contingent asset are not recognized, but contingent asset is disclosed only if it is probable. So you have to explain that particular part. Okay. So why it is probable? So very, very important chart. What is possible? Possible is not 0, it is 1 to 100. Okay. Please understand. And our superstar has also mentioned this, that when I say only one time, it is equivalent to 100 times. So don't always go by that. So it is between 1 to 100. Okay, 1 to 100. 1 to 100 means possible. Closer to 100 means probable. Closer to 0 means improbable. Not 0, improbable. Most probably it may not happen. Most probably means you are very close to 0. Very close to not 0. Please understand. 0 means impossible. 100 means possible. 100 means definite. Okay. So good. So now, which assets are not recognized in the financial statements unless there is virtual certainty in receipt? My goodness, very, very important. Which assets are not recognized? This is another very important terminology. So I will take you to para number 33. Look at this word. Contingent assets are not recognized in financials. Actually, I have to disclose when it is probable. And recognition not should be recognized at all. But if it is probable, that means you are very close to 100. And there is an undertaking given, there is an agreement given, that and also a guarantee given. So these are all the words. That means it will definitely happen. Contingent assets are not recognized. However, when the realization of income is virtually certain because of the guarantee, because of certain agreements which has been confirmed by a third party or by the counterparty, then the related asset is not contingent and the recognition is appropriate. Then you have to recognize that asset, recognize that revenue. So for example, will I get a compensation? Okay, will I get a compensation? So compensation, it is in court. No, whether court is going to give the verdict or not, there is an agreement between both of us and there is a guarantee given. So we will going to invoke that guarantee, and the counterparty has also agreed that I will make the payment. Okay, and there is an agreement. So, and that agreement, how probable it is, how virtually certain. This word is called virtually certain. Virtually certain means happen. Virtually certain means future it will happen. Okay, future it will happen. Somebody asked the question. Now, say tomorrow you are taking me for Anuradha Sriram's Kacheri. Okay, so I also promised my wife I will take you to Anuradha Sriram's Kacheri. So is this a contingent event or a possible event or a probable event? Okay, actually possible event only, because today I don't have a ticket. Okay, I only called for somebody for a ticket. He has assured me that the possible ticket will come. Now, when it is a contingent asset, probable. Now he calls me and say, a ticket, I have got it, I am going to give you. So is it virtually certain? It is probable. So I only got a news. So it is probable. When it is virtually certain, you made a payment and the ticket you have received it. Now ticket is in your hand. So only the event you have to go tomorrow. That's virtually certain. So that is why whenever you commit to your wife or your better half, unless and otherwise virtually certain, never commit. Okay, when it is probable, don't commit. Only it is virtually certain, it is you have to commit. So friends, thank you very much for this second day session. Before I invite Sampath Kumarji to share his closing remarks, may I request a few of you, the participants, to share your thoughts. You can raise your hand. I'll unmute you. Let me first start with Mr. Mahesh Shankar, then Satyanarayan. Also, I've unmuted, so let us listen to them. We'll also go to Mr. Prabha. Prabha also, we'll listen to Prabha. Yes, good morning, Mr. Mahesh.
Thanks a lot. Today being the second day, it's amazing. You keep us completely glued to the screen, and then the way you use the anecdotes as well as the example is really awesome. Thanks again. So I look forward to join every morning at 8:30. So that's a clear indication. This session is really very interesting. One thing I wanted to
Mahesh, kindly introduce yourself for the August gathering. Your name, your location, and your academic achievements.
Sure. So I am based out of Bangalore, and so that's about it. And then I work as a CFO in one of the organizations. So this basically refreshes some of the IndAS, especially IndAS agriculture, which is not applicable in my case, right? So at least a good way to know about other IndAS as well. My question to you, or rather I ask, is would there be a possibility to share this PPT or whatever document you are showing? Because not every page you are going through yesterday, especially yesterday. So I'm not sure, is that something a possibility?
It's already shared, Mr. Mahesh Shankar. Not many you have visited my blog and downloaded it.
Oh, okay. So probably I missed it. So I will just look forward. Thank you.
Please visit my blog. It is already there.
Okay, thank you.
Yeah. Thank you. Let us listen to Satyanarayan and then to Prabha.
Thank you, Raju sir. My name is Satyanarayan Sharma, basically from Jaipur, practicing as a chartered accountant. Thank you for sharing your insight and expertise with us. Your expertise and insight have been very truly valuable for us. Thank you for.
Thank you, Satyanarayan ji. And let's listen to Prabha. Good morning. Very good morning. Okay, so anybody else who wish to share your thoughts? Okay, so over to Sampath Kumar ji for your closing remarks. Ji.
Morning, Dr. Raju and my dear friends. Today, the minute nuances, what is a biological asset and biological asset produced with respect to IndAS 41 with live example of a reported animal report, and similarly, what is a provision with respect to provision or a liability with respect to IndAS 37 with live examples and taking us through the practical aspects. Raju repeatedly says, understand. If you understand the business, it is nice to appreciate these concepts. If you don't understand the business, any number of reading may not be able to comprehend and decipher what it is all. Thank you very much, Dr. Raju, for taking us through your experiences and knowledge and making the entire participants in a very focused manner and glued to the system to listen only. By the time we wink, it is 55 minutes are over. So thank you very much. And my dear friends, oft repeated request, we can download the material from logging into Dr. Raju's blogspot, 3S Pro blogspot, and please add a word of your reflections about today's session.